Buongiorno a tutti. Good morning, everybody, and welcome to this roundtable on Islamic finance and social integration. Welcome, of course, to Rafiuddine Shikoh, CEO, Dinar Standard, and to Roustam Vakhitov, founder of Tax Insights. The goal of this session is to explore the ways and means by which Islamic finance can help social integration. And let me start by defining what is the Islamic ecosystem. As we know, for Muslims, Islam is a way of life. It touches upon many sectors, food and food services, of course, but also fashion, cosmetics and personal care, pharmaceuticals, health, but also the way they educate their children, tourism, and last but not least, finance, the way Muslims make money and save money. The very interesting thing is that those sectors, those values, have a universal appeal, because if you have a look at, for example, social responsibilities or modesty or family values or equitable financing, you will find the same values that you find in the Muslim ecosystem. And this is perhaps the reason why Islamic finance and generally speaking, the ecosystem has such a great success around the globe. But what are the core drivers? Of course, on the demand side is the well-known, large and fast-growing Muslim populations. As a result, expanding global Islamic economies and demand for goods and services. But also, I would like to draw your attention on digital connectivity, the way people can interconnect, exchange views, exchange goods, buy and sell, is of great help to the development of the Islamic economy. On the supply side, of course, the big role, the most important role, is played by government, by establishing a framework that allows Islamic finance transactions, and especially the tax authorities, because Islamic finance needs a level playing field to be able to operate in a conventional environment. And also, quite important is the entry of top global food, but also fashion or tourism brands into the halal ecosystem. All the top brands have dedicated sectors that try to satisfy the demands of their Muslims customers and clients. Now, to proceed further, let's have a look at Islamic finance and social integrations. The two are interconnecting in several ways. Islamic finance is rooted in Islamic principles that prohibit certain financial activities and speculative or unethical transactions, and seek to create a financial system that is more equitable and inclusive. Some key aspects on how Islamic finance promotes social integrations are the following. The first one, for example, is the well-known prohibition of interest. This prohibition is intended to eliminate exploitative lending practices and ensure that financial transactions are based on profit and loss sharing, which brings us to the second element, which is risk sharing. This approach promotes a sense of economic partnerships and shared responsibility. making it easier for individuals with limited capital to access financing and engage in entrepreneurial activities. Of course, asset-backed financing. This asset-backed approach can enable individuals who may not have strong credit histories to obtain financing, which is not possible in the conventional environment. The well-known zakat and sadaqah come next. Zakat is an obligatory also giving to help the less fortunate, whereas sadaqah is a voluntary charitable giving. These practices contribute to wealth redistribution and support social welfare programs, helping to alleviate poverty and improve the living condition of disadvantaged individuals. Takaful and microfinance. Takaful is an Islamic insurance, provides a form of social protection by pooling risk and resources within the community. On the other side, Islamic finance institutions also offer microfinance products, though one must recognize that Islamic microfinance is lagging badly behind conventional microfinance. Next come ethical investments. Islamic finance principles require investment to be consistent with Islamic values. For example, avoiding industry like alcohol, gambling, and pork production. This emphasis on ethical and social responsible investment aligns with the broader goal of fostering a more just and inclusive financial system. And finally, financial inclusion, which is the goal actually of all these tools. Islamic financial institutions focus on reaching underserved and unbanked population, especially in regions with predominantly Muslim community. In summary, Islamic finance promotes social inclusion by offering financial products and services that are more equitable, ethical, and accessible. Its emphasis on risk sharing, asset-backed financing, and wealth distribution aligns well with the goal of reducing economic disparities and improving the economic well-being of marginalized communities. But in which country is Islamic finance blossoming? Have a look at this chart. The dark blue highlights countries where Islamic finance is very successful. The pale blue or the fading blue on the other side highlights countries where Islamic finance is a weak proposition. But the very important thing is that there is actually no country in the world whereas there is the presence of Islamic finance, even in countries like unexpected countries, I would say, like, South America or Australia or some part of non-Muslim Africa. There you have Islamic finance. And what is the value nowadays of this market? It's a staggering $4 trillion. And I recall that 1 trillion is 1,000 billion, which is a big amount of money. And above all, the growth rate has been steadily on the upside for the last 10 or 20 years, actually. And you can find Islamic finance in all asset classes, in banking, in takaful, insurance, in other Islamic finance institutions, which includes, private equity or microfinance, in sukuk, the so-called bonds, Islamic bonds, and Islamic funds. So it's a success story, yes, but at the same time, one needs to compare this success story with the bigger picture. Let's proceed. Okay, we said about almost 3 trillion US dollar in Islamic banking assets. But this compared to 183 trillion of conventional banking assets. And this tells you that Islamic finance is a small subset, is a niche market vis-à-vis the global market. And the same story applies to takaful, insurance. Look at 73 billion comparing to 6 trillion of global insurance premiums. Sukuk bonds are not an exception. 713 billion of outstanding sukuk compared to 119 trillions of total debt outstanding. And the same is true in Islamic funds. 238 billion versus 112 trillion US dollar. Now let's move to a subset of Islamic finance, the so-called social or impact Islamic finance. Social Islamic finance combines the principle of Islamic finance with a strong focus on social justice, philanthropy, and sustainability. It aims to address social inequalities while adhering to the tenets of Islamic Sharia. This practice is growing in popularity as more and more individuals and organizations seek financial solutions that align with both their faith and their commitment to social responsibilities. Islamic social finance encompasses various financial instruments and mechanisms. They include, of course, zakat, which, as we know, is one of the 5 pillars of Islam, which oblige Muslims to give annually a portion of their wealth to those in need. Social Islamic finance often involves the collection and distribution of zakat funds to support poverty alleviation, healthcare, education, and other social initiatives. Awqaf, that's very, very important. Awqaf are Islamic endowments or charitable trusts that involve the donation of assets, such as land or property, tangibles, or nowadays even cash, for specific charitable purposes. The income generated from these assets is used to fund various social and humanitarian projects. Sadaqah, which we know refers to voluntary charitable giving, it can be used for endless way to support a wide range of social causes. To name a few, from helping the poor and providing medical assistance to funding educational programs and disaster relief efforts, to pay the premium for takaful, and so on and so forth. We have seen Islamic microfinance, which wants to serve the underdeveloped countries and provide microloans and financial services to individuals. Again, unfortunately, is not much developed. Ethical and impact investing is quite important. Social responsible and ethical investment principles are integrated into Islamic finance, allowing investors to support businesses and projects that align with ethical and environmental criteria, such as avoiding, in industry that produce armaments or alcohol or tobacco or gambling, and so on and so forth. Quite trendy now are sukuk for social projects. There are nowadays in the market a number of social sukuk or green sukuk. Those are the so-called Islamic bonds that can be issued to raise funds for various projects, including social and infrastructure projects that benefit the community. And last but not least, Islamic socially responsible investment funds. These funds pull capital from investors who seek both financial returns and adherence to ethical and social values. They invest in businesses and projects that meet Sharia compliant and socially responsible criteria. Rafiuddine, thank you for joining us on this session on social integration and Islamic finance. Dinar Standard is a growth strategy research and execution management firm. It specializes in government innovation, the global halal ethical economy, and the social impact space. At Dinar Standards, you believe that profitable and sustainable businesses are the greatest source of innovation and solutions addressing human needs. Your universal values framework, rooted in Islamic principle, shapes your corporate culture. These principles include taqwa, conscience, ihsan, excellence, amana, integrity, and adl, socio-economic justice. As the CEO of Dinar Standard, you have a wide experience in all sectors of Islamic finance. Besides, you are the editor of the yearly State of the Global Islamic Economy report, which is the Bible of the sector. Can you tell us about the current state of Islamic finance in the world, including banking, leasing, sukuk, equity markets, investment funds, takaful, and microfinance?
Thank you so much, Alberto. I'd like to first of all thank the organizers of the 6th Turin Islamic Finance Forum. It is commendable that you've been able to consistently develop thought leadership, awareness, and the application of Islamic finance for the region in Italy, and continue to develop this important proposition for the region. In terms of your question, I want to first of all start by acknowledging the reality that we are in when we talk about 30 years of where do we stand after 30 years of Islamic finance. It's important to recognize the age in which we're living in today and where we are, where as the Islamic finance communities or the markets, the core markets for Islamic finance, are faced with a number of crises. And as I'm recording this, it is currently the crisis in Palestine, in Gaza Strip in particular, and in fact all across Palestine, that the communities that are the core markets for Islamic finance are struggling. And I raise that because the role of Islamic finance or Islamic economy or overall economic platforms is to also strengthen and enable communities to have leverage. And I believe in 30 years of Islamic finance, yes, we have achieved today the asset base of around $4 trillion as per the last Islamic Finance Development Indicator report from Thomson Reuters and the IDB Institute, Islamic Development Bank Institute. And of course, we're seeing good year-on-year growth continue to happen. Nevertheless, it's still a very small segment of the overall financial markets that are part of the core Islamic finance markets. And so their role, substantial role, in context of socio-economic impact, socio-political impact, socio-economic leverage is it's still after 30 years in its infancy, we could say, in the most positive sense possibly, or has really not been able to have a significant impact. We are certainly grateful that the Islamic finance does continue to develop. There's a lot of thought leadership. There's a lot of regulatory developments across the various global markets of Islamic finance. But still, when it comes to significant impact, it's still very minor. We look at the opportunity of Islamic finance from the point of view of its grand vision and purpose of a equitable, a unique global financial platform of equitable financing. So let's start, with that context in mind, given the question of after 30 years where we stand. So I don't want to go into the specifics of, where are we in terms of funds versus the takaful aspect versus retail banking and so forth. I think those numbers and data points are available to all of us, but really speaking in context of the grand vision, when we look at as Islamic finance, given its grand potential, been able to create a global level social investment bank? Do we have today a successful model of a Islamic microfinance that would have been at the level of what Grameen was? Do we have financial inclusion in the banking for poor that has been successfully enabled through Islamic finance? And I would say in all of those cases, unfortunately, no. So I think we have certainly some positive signs in the form of Islamic fintech with social finance, peer-to-peer, some of the technology enablement. And I'd say it's not just technology, it's the next young generation who are coming with a more impact-driven view that I think are driving some of these opportunities, as well as there's this wider Islamic halal real economy sectors that are presenting some unique opportunities for Islamic finance as well. So this is sort of my view of where we are with in terms of where we stand on the Islamic finance.
In jurisdictions where we have large and well-to-do communities, for example, the UK and France, but also the European Union with more than 25 million Muslims, or the US with more than 4 million. Islamic finance has a very limited traction. Everywhere we have halal food, but not halal finance. What prevents the blossoming of Islamic finance? I'm just thinking about perhaps lack of awareness and knowledge by the general public, underdeveloped ecosystem and regulation, or limited availability of Sharia-compliant financial instruments, or even shortage of qualified Sharia scholars who are well versed in Islamic finance.
In regard to the question about the why has there not been a significant boom or traction or adoption of Islamic finance versus, for example, as you said, halal food, when the requirement from a religious context point of view is almost even stricter than non-halal food consumption. Yet we see a consistent gap, a huge delta in terms of Islamic finance adoption versus people are consuming halal or non-halal food as a comparison, which is fascinating because this is consistent across the geographies globally, from the U.S. where I reside to Indonesia, where I'm currently at, or in the GCC, where we have a lot of our work there as well, and other places as well. So this is certainly and 30 years into the development of Islamic finance, we it seems to not have this issue, or this gap has not been, there is this proverbial glass ceiling, it seems, that Islamic finance is not able to break through vis-a-vis conventional finance in terms of its traction in its core markets. Our view, and this is not scientific in any way, but I would say anecdotally, many of the things that you have would highlight and others would highlight are certainly there. The ones I would like to highlight, again, based on our observation as the strategists and analysts in the wider Islamic economy space, is that one is Islamic finance has not been able to tell its story in a effective way to the audience. And I think there is this, perception challenge, and I would put the responsibility on the industry to have not been able to cut through this perception that Islamic finance is nothing but conventional, just wrapped in, with a nice wrapper. And I think this is something that can be addressed when the focus is genuinely the ethos and the underlying context and purpose of equitable financing that Islamic finance brings across all aspects of financial services, may it be, micro capital markets to takaful, etc., investments, all the full spectrum of needs. So I think because of this, I believe this is one of the main reasons. I would also say when we look at currently in Indonesia and or similar, maybe the case in Pakistan or Egypt and other markets where conventional finance still remains to be significant, almost 80-90%, again, 30 years into Islamic finance. Part of it seems to us, is government's commitment to direct, while there's government commitment on the regulation side and creating an ecosystem, but really directing finances or directing the flow of financial transactions through Islamic financial institutions or instruments is important. So why are a lot of the national bonds or infrastructure investments not going through Islamic financial instruments? And I think this is this has to be a commitment from the government side. And yes, the argument may be that it is purely from financial impact. I'm sorry, the value or the profitability or the best deal. But if there isn't a commitment to the ethos of Islamic finance, their willingness to compromise there, then this hurts. So there is aspects of the industry is responsible, the government is also responsible, and I think ultimately the end users also have to, obviously have to make the end decision as well in taking Islamic finance up. It doesn't have to be. It cannot just be the cheapest option in the market. So those are some of our views. Again, those are just anecdotal.
It is said that there are two approaches to Islamic finance. A top-down approach, going after the big fish, and a bottom-up approach, listening to the needs of the communities. What are the features of both? And will a proactive use of blockchain, distributed ledger technology, fintech, help in the disintermediation process? Or perhaps Islamic finance need a providers dedicated to a single product?
So in regards to your question about the two approaches, the top-down or bottom-up, what are the features? Well, first of all, let's understand when we talk about Islamic finance, we're talking about financial services in its full spectrum of needs. And I think when we look at it that way, it's not necessarily a top-down or bottom-up approach. It's based on what the financial services needs are across the spectrum of stakeholders and customer segments, from government agency needs to corporate, to business, SMEs, to retail, And in the retail, you have, the unbanked, the high net worth. So as a industry, you have to look to serve everyone, obviously legitimately having financial needs, and the industry would say that. So a social impact focus would not mean that you don't serve high net worth individuals, right? But it should not be the only focus either. And similarly, on the capital, on the corporate side, it should not only serve the large enterprises, large businesses, but it should also look at the spectrum of communities out there. So first of all, we wouldn't see it as a one or the other approach. It has to be looked from an industry's opportunity and healthy and growth and serving the needs. It has to be looked at comprehensively. In terms of the utilization of distributed ledger technology, fintech, in terms of help in this intermediation process or opportunity. Yes, I mean, we're seeing this evolution of blockchain-based platforms that are not just in the form of the financial instruments of cryptocurrency and the likes, or other instruments like NFTs and so forth that have developed. And financial institutions are having to see, not just financial institutions, but the whole ecosystem are really driving at this point the regulatory approvals of enabling such distributed technology. And I feel, while the promise of blockchain, Bitcoin, other crypto alternative assets is very strong, especially when it comes to tokenization of financial institution instruments and investment, and bringing in, making it accessible. I think that is the promise of these technologies, and certainly it will help Islamic finance as well. I think this is a opportunity, and the challenges are not unique to Islamic finance market or industry. It's, I think, a wider, broader financial services global challenge, and we're seeing a lot of developments happening. So Islamic finance will certainly piggyback at this point. I mean, we don't have innovators here, right? So we're Islamic finance is certainly follower when it comes to the technology, leveraging technology. So I mean, we would love to see if we can actually innovate new aspects of applying these technologies to address financial inclusion, to making investment and financing more accessible. I think we have some exciting fintechs in that regard, but this is still a follower game for Islamic finance stakeholders today. So that would be our view on that.
The Islamic finance industry is been widely criticized for ignoring its basic philosophy and moving in the, once again, wrong direction by sidelining risk-sharing finance in favor of fixed markup finance and lacking efforts to help small traders and the poor. What is your opinion?
In regards to the criticism that Islamic finance has been received on ignoring its basic philosophy and moving in the wrong direction, I think my question back is, first of all, I need to understand where is this criticism coming from to know. Obviously, there is Islamic banking out there. There's also Islamic Development Bank group that is doing significant work, and there is also obviously a segment of Islamic social finance, Islamic fintech. So there is good work being done that is in line with the Islamic core philosophy. But I agree. I would agree that, like I said earlier, vis-a-vis its promise, vis-a-vis the size of the community. We're talking about a quarter of the world's population, almost 20% of the global GDP that is OIC the mostly Muslim majority 57 countries represent in terms of the GDP, and the wider other Islamic ethical finance communities globally as well. So it's a significant base, and the current Islamic finance traction doesn't reflect that. So yes, and I agree that it is, I wouldn't say wrong direction, but obviously the underlying ethos and the commitment to its ultimate purpose, it's a hard thing when you look at the practicality and the reality of today's world. But I think that there are a lot of the young generation of Islamic finance or Islamic fintech that are really bringing this to fore. There are a lot of veterans who have shown commitment, and of course they're pioneers. They're pioneers in Islamic finance space, as academics, as thought leaders, and even bankers and investment bankers who really have built models from Dubai Islamic Bank to Fajr Capital and many others, and of course Islamic Development Bank Group, who I would say have really set a good base, a strong base. But it has it been manifested? Has it gone to where it can go? No. When we look at the fundamentals of a for-profit enterprise, which Islamic financial institutions are and should be for the most part, but the underlying ethos and intention should be with a model that is not purely profit maximization, but rather stakeholder return optimization and having sort of that Islamic Sharia core. And that has to manifest in its KPIs ultimately, and it has to manifest in terms of what the shareholders and the investors expect. So the social KPIs have to be part of what the investors want in an Islamic finance ecosystem that includes governments who also contribute to its setup. So those, so I think that's where I would say it. I would not say directly that it is wrong direction, but certainly it's an opportunity not realized, and we hope that changes.
What is the added value of Islamic finance with regards to the SDGs? Promoted socially responsible development, providing a non-traditional source of financing, encouraging investors to create positive non-financial value. But is there a risk of dilution of Islamic values?
Thank you for the opportunity to speak on this very important question, which is around Islamic finance's value add or its role in conjunction with SDGs. The question is the risk of dilution of Islamic values. We have a very strong view that, of course, SDGs are good social KPIs, social impact KPIs. However, I think Islamic finance should be taking a lead in shaping the prioritizations of addressing the SDGs. Today, it seems like all the extent to which Islamic finance is addressing this in context of SDGs or overall global socioeconomic or social development needs is in context of ESG compliance or ESG sukuk issuances and its reporting. And that's really, or maybe, a little bit of the CSR reporting and CSR work. I think it would be unfortunate if that's all we relegate the potential of Islamic finance to. In fact, given the ethos and underlying context, the opportunity is significantly global, an opportunity to lead. And in fact, perhaps Islamic finance community should be looking to establishing a social economic needs index and mapping that is core in its markets as one of the contexts of social impact for all organizations in an Islamic economy context is that the communities you work in, you need to play a significant socioeconomic impact role as well. and ensure that the communities around are well taken care of, their needs and so forth. So I think one, SDGs are certainly relevant, and Islamic finance contribution will overlay it or will contribute to it. But the lens should not be, it should be unique and original to its own unique context. For example, when we, in a recent work in the GCC region, we had mapped the socioeconomic needs of the Pan-Arab region to direct Waqf, Sadaqah, Zakat distribution, and in particular on Waqf assets. So these are the social finance instruments, and they address the direct, wider social impact need. And ultimately, isn't that what it's about when we talk about SDGs? What is the impact role? Of course, certainly, Islamic finance is not just social. Islamic social finance in its focused impact of poverty alleviation, other social needs in terms of education, low-income housing, and so forth. But there is certainly business models that Islamic finance can address that spectrum of impact. And then when it comes to the bigger opportunity areas in terms of sustainable agriculture, sustainable construction, all of the other responsible and sustainability and environmentally positive solutions, those are part of the prioritized, those are part of the solutions that should be focused as a business case, as part of the bigger economic need to be addressed by doing its own impact index and mapping of the core target market. So that's how we see the role of Islamic finance in context of SDGs.
Good morning, Roustam, and thank you for joining our session.
Good morning.
You are an expert in international taxation, both in Russia and in the Netherlands, where we're living at present, and also the co-founder of the Academy of BEPS, a educational platform. You may remember that more than 10 years ago, you advised ASSAIF for the first and only successful Islamic finance transactions done in Russia. We were able to channel $60 million from the Gulf, from Dubai and Saudi Arabia to Kazakhstan. So you are the right person to ask you to give us an update on what is happening in Russia in Islamic finance, both from the on the industry side and also on the non-banking organizations. And also because we heard that there is a legislative update initiative that will allow Islamic finance to be implemented in Kazakhstan, Bashkortostan, Chechnya, and Dagestan.
Well, thank you, Alberto, for giving the opportunity to share the thoughts and participate in this discussion. Islamic finance discussion in Russia has been going on for 20 years by now, but there was no much progress in respect of the actual implementation. And there are several reasons for this. The transaction which you mentioned was indeed the successful one, but the opportunities for application of such opportunities and financial structuring are quite limited. Russian banks had been technically restricted from participating in commodity transactions, and it limited significantly the opportunity for standard Murabaha deals. However, some non-banking organizations have been practicing Islamic finance services for years, though without exponential growth. And indeed, this year, the legislative changes allowed a so-called experiment with Islamic finance implementation in 4 predominantly Muslim regions: Tatarstan, Bashkortostan, Chechnya, and Dagestan. Detailed regulations are still being expected. However, some financial institutions may start developing Islamic finance in these regions, and some already got registration in special list of these entities who are allowed to practice in these regions. So this is perceived rather as a forward-looking statement, more than a like massive development. Nevertheless, there is certain progress which green lights development of Islamic finance services in Russia. That's basically what I think is most important for this part of our discussion.
So what are the reasons for this failure? Lack of awareness and knowledge by the general public, perhaps a underdeveloped ecosystem and regulations, also maybe limited availability of Sharia compliant financial instruments, or maybe also Sharia scholars. What is your take on this?
Well, it is difficult to single out one predominant the reason why Islamic finance has not developed in Russia, because I'm comparing it with the Netherlands and also with significant Muslim population. There is not much development over the last, let's say, 20 years. Maybe this is combination of all these factors playing a certain part in the final outcome. Indeed, there is insignificant, let's say, demand, maybe lack of awareness among the general public, maybe the reason for limited success of Islamic finance in Russia so far. I have not seen significant consumer demand for these products, although if we speak about halal food industry, it's rocketing. It grows enormously. However, it doesn't happen, just didn't happen with Islamic finance instruments and services. And while regulators seem to be aware of Islamic finance, they do not view public demand as a priority to create tailored regulations. Basically, they just do not see the need in this. There is no developed ecosystem. If there would be some critical mass of businesses and individuals requiring these Islamic finance products, maybe there would be more financial institutions willing to offer them, and regulators, they might also see that this is a serious industry which needs to be supported, or at least have been taken seriously. So this is perhaps the combination of factors, one of which is the lack of critical mass.
Okay, thank you. So I understand that you think that a major role should be played by startups, by the so-called fintech initiatives, perhaps the blockchain helping into the disintermediation process. Also, perhaps just small enterprises that focus on specific needs, like, for example, home financing. We know that quite recently was a Dinar Riba initiative in Russia. Can you comment on this?
Sure. The existing businesses in Russia, they are of non-banking nature. like financial house Amal, Nur, Lariba, and they represent rather non-banking organizations. And going forward, for small organizations, for innovative businesses, it's just easier to take off without being for large banking groups, for example. And they might have better chances than big banks to succeed and offer maybe not comprehensive banking services, but satisfying particular needs like payment system, crowd lending system, and many examples of successful Islamic finance, fintech startups. Some of them, they're offering valuation of basically rating halal and non-halal investments, some other focus on other needs, and they might form this critical mass which is required to boost Islamic finance in Russia.
Very interesting. So now to move to Europe and to a European country, to the Netherlands where we're living. What is the situation there in Netherlands? Do we have a level playing field in terms of taxation that will allow Islamic finance transactions? Is there a demand by the public? How is the attitude of the regulators?
In the Netherlands, situation is very similar to the Russian one. There seems to be significant Muslim population, but there is no massive growth of this industry. There were attempts around 2006 to offer Islamic mortgage products, but issues with tax deductibility of Sharia-compliant returns meant that they would never take off. Because if it is not deductible from tax base with Dutch tax rates up to roughly 50%, it's just not competitive. And tax rules did not prohibit Sharia-compliant structures as such, but lack of deductibility made them unattractive. More broadly, there has been insufficient coordinated effort and no massive consumer demand, at least not explicitly expressed consumer demand. Interestingly, some Moroccan banks were active in the Netherlands due to large Moroccan diaspora. And I heard some of them, they're offering some Islamic finance products to Moroccan passport holders. So they were not allowed to serve the Dutch owners, but maybe through head offices, they arranged that the Moroccan passport holders could use these services. As in Russia, the similar startups in niche areas like payments and other elements of traditional banking services, they might be successful. However, for large banks, it's difficult for me to imagine that ING or Rabo or ABN AMRO would go to launch some serious Islamic finance businesses. The same thing as in Russia, the thriving halal food industry shows there is a demand for Sharia-compliant products. And with some momentum from pioneering startups, major financial players may also recognize the opportunities in Islamic finance.
Okay, my last questions. We understand that there is a quite large Moroccan society in the Netherlands. I've been there for quite a while, second, third, perhaps fourth generation, so they're quite well integrated into the economic system. Mm-hmm. Do they have a need, a requirement? They want to have access to Islamic finance, and is there a response by the banks, by maybe Moroccan banks or conventional banks to this demand?
It is interesting that the significant Moroccan community is being recognized. You will see Moroccan tea on basically every restaurant, in every cafe, and it was not the practice even 10 years ago. So the needs of this community are being met or at least recognized. However, it didn't extend yet to Islamic finance products, so you will not find Islamic mortgage if you go to ING Bank, although you might see the Moroccan tea on the shelf. And indeed, there is a significant multi-generational Moroccan community integrated in Dutch economy quite well. And some might want to have access to Islamic finance products. However, at present, there was no offering. So that's what I can comment in this respect.
Okay, thank you, Roustam, for joining us, and we wish you all the best.
Thank you. Thank you, Alberto. My pleasure.
Okay, at the end of this quite interesting and I think thought-provoking session, we would like to share with the audience a recommendation that both Rafiuddine and Roustam and myself deem important. While Islamic finance has made significant strides, challenges such as standardization, regulatory harmonization, and awareness still need to be addressed for its continued growth and acceptance on a global scale. Additionally, ongoing collaboration between Islamic finance institutions, regulatory bodies, and the wider financial industry is crucial for its sustained development. Particularly 4 areas we think should be taken care of. The first one, education and awareness. Increased awareness and understanding of Islamic finance principles can contribute to its growth. Education and outreach effort can help dispel misconception and promote the benefit of Islamic finance, attracting a wider audience of investors and consumers. Islamic fintechs and digitalizations. The integration of financial technologies, the so-called fintech in Islamic finance, is creating new opportunities. New opportunities for efficiency, accessibility, and innovation. Digital banking, mobile finance, and blockchain application are being developed to cater to the specific needs of Islamic finance. Innovation and product development. The Islamic finance industry is witnessing innovation and the development of new products to meet the evolving needs of businesses and consumers. Sukuk, Islamic funds, and fintech solutions are examples that must be followed and incremented of innovation in the Islamic financial sectors. Integration with conventional finance. Collaboration and integration between Islamic finance and conventional finance systems can create a more inclusive and diverse financial landscape. Hybrid financial products and cross-industry partnerships can contribute to the growth and acceptance of Islamic finance globally. Thank you very much, everybody, for attending our session, and we wish everybody all the best.
Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, Alberto, I remember very well that times you have been a more frequent guest to Russia and you have managed to fill all of us with your profound energy and positive energy. Jazakallah khairan. Well, to be brief, I'll outline the main two lines of development of Islamic finance and business since that time. First of all, the Islamic finance business line. If you remember that time, there were the very first attempts to create and to establish the first Islamic finance companies, which were in the form of microfinance and quasi-finance initiatives. So since that time, that their first attempts grew up to profound businesses. Of course, they're not huge, but still the overall assets are around 100 million USD plus nowadays. Now we have around 40 plus Islamic finance initiatives and projects, which embrace banks, leasing companies, asset management projects, investment companies, and trade finance projects. So we can see that there is a broad variety of products and services in Islamic finance market nowadays. The second line is halal business. So since 2015, some major Russian agricultural producers have turned to halal production, mainly targeting not only the internal market but also the exports market, and they have nowadays succeeded in taking some portion of the imports of the Muslim countries, particularly when we speak about halal poultry and beef and halal chocolate in the Middle East and in the Gulf region. So therefore we can say that halal business and Islamic finance business have been growing steadily throughout the last 10 to 15 years, both in assets and volumes and the number of initiatives and the number of clients, number of companies. As you rightly mentioned, there is a huge Muslim population in Russia, and the demand for such products and services has also been growing throughout all these years. The Akbar's deal was predominantly an image deal, but it had certain marketing effects for sure. As I outlined, the Islamic finance market in Russia started from scratch, and it was not evident for the regulator from the beginning that it could grow to any serious figures. However, starting from 2015, when Russia's major partner at the time, Europe, started posing financial sanctions, Russia started seeking for alternative financial partners, and it made certain steps towards enhancing trade and financial relations with the Gulf and the Middle East. However, this international landscape didn't have a serious impact on the local Islamic finance market, which I believe at all time was the major driver for all Islamic finance developments, because most part of the initiatives target local clients, both retail and corporate segments. At the same time, there were some international deals, and they could really exceed in numbers the local market assets. So as I said, we already had a growing number of initiatives, and by 2020 we had around 20 plus Islamic finance initiatives, and still there were no amendments to the legislation. And it is worth noting that at that time already a working group on partnership banking, and this is the official name in all Islamic finance in Russia, partnership finance. So the working group had already been operating under the Bank of Russia, but no strategy for the market special regulation had been adopted by that time. And the situation really didn't change until recently. So one of the positions which was voiced is that since Islamic finance market can develop without special regulation, so why there is a need to introduce any special regulation for that? This is true. This initiative is called the Law on the Experiment for Partnership Finance, and the law was first drafted about a year ago, and the law provides a broad variety of legal entities to join the experiment. So among them are credit institutions, non-credit financial institutions, and even non-credit, non-financial, non-licensed institutions, consumer cooperatives, public benefit funds, autonomous non-profit organizations, LLCs, joint stock companies, or partnership. So all these forms of entities can join the experiment, which started in September this year and will last for 2 years. And this is really a breakthrough for the Islamic finance market in Russia, since this is the first official legislative approval of the fact that the Islamic finance market exists and it needs special attention and regulation. And I'm happy to outline that when drafting the law and discussing the law draft, the legislator has considered the current landscape of the Islamic finance market in Russia and the regions where the main activities take place. So therefore, the law allows for a broad variety of entities to join the experiment, of course subject to certain requirements, but with only 15 million rubles capital requirement for non-financial institutions, which is really affordable. Among the purpose of the law are determining the effectiveness of special regulation for the provision of financial services in the experimental territories, and also drafting proposals for amendments to the legislation of the Russian Federation for the future periods in terms of creating the necessary conditions for the implementation of partnership financing activities. So this law removes the main hurdles for the banks in Islamic finance transactions, which are the ban for trading activities, which is removed, and now the banks can do murabaha directly and not through subsidiaries. And as someone may know, some of the banks did murabaha for home financing, for example, through subsidiaries, as it was done by Akbar's bank, for example. And also another hurdle is the investment account management. So now the experiment participants can implement investment asset management, which is Mudaraba agreements. Also, the law prohibits interest-based financial activities for the experiment participants and financing alcohol, tobacco, and gambling industries. So nowadays we have around 4 participants already included into the special register with the Bank of Russia, and another 5 to 6 companies are in the process of entering the register, and we expect some more companies to join throughout the experiment from different regions, from 4 regions of Russia. And it's very important to notice that not only they can serve clients from those particular 4 regions, but that they can attract clients from all the regions of the Russian Federation. And there is also no limits for the international companies and the Islamic banks from abroad to join as investors to those special companies who can join the experiment. Another point is that a special expert council is being formed now under the Russian government to assess the results of the experiment and to advise on further legislative amendments. Company Alif Consult is based in Moscow. It has been operating since 2015, and our main task is to focus on assisting companies in Russia and CIS in developing and introduction of Islamic finance products and services. We also form a sound Sharia compliance solution for our clients and governance structures in accordance with IOFI Sharia and governance standards. And as you may know, the official publication of the IOFI Sharia standards in Russia has taken place several years ago. So nowadays the Russian audience, as well as the Russian-speaking audience of the CIS countries, can use the official Russian translation of ASSAIF Sharia standards, and we are very thankful for ASSAIF for this very helpful opportunity. In our activities, we aim at securing the maqasid al-Sharia, and we do not support any hiyals or controversial solutions such as tawarruk, and we hope that our market will not see many such practices in the near future. Now about the Russian Association of Experts in Islamic Finance, which is RAIF, it is also a very important platform for the whole Russian Islamic finance market. So far, we unite over 30 experts, mainly from Russia. We have some experts joining from CIS as well. Our experts represent running Islamic finance entity, Sharia scholars, lawyers, specialists in accounting, and other experts. And our main target is to protect the market from the unqualified opinion and to unite efforts providing expert views on legislative, scientific, and other issues. And thank you so much for this opportunity to share the information about how the market is going on. We are very open for the international audience to cooperate and to exchange views and to collaborate in any regard in Islamic finance and halal businesses. Jazakallah khairan and wassalamu alaikum.